Hey everyone, welcome back to Corporate Decoder. Today we're diving into electroCore's annual report. It's like trying to understand a doctor's prescription, but hopefully I can translate it into something we can all understand. electroCore makes devices that stimulate your vagus nerve without surgery. They claim it helps with things like migraines and even boosts human performance. Do they deliver, or is this just another overhyped health gadget? Let's find out. First, electroCore makes devices that treat a few specific health problems and also sells general wellness products. Their big seller remains GammaCore Sapphire, a prescription device for headaches. They also sell Truvaga for general wellness and Tastin IM for boosting performance. Okay, so where does the money come from? Well, a large portion comes from the United States Department of Veteran Affairs. During 2024, 70.6% of their money came from them. That is quite concerning. And if the US government makes any sort of cuts, it will affect their financials. Here is some good news. They also have a deal with Lovell Government Services to distribute their stuff throughout the federal market. This should help, but there is no guarantee government customers will adopt this new ordering process. The United Kingdom is also important for them. Let's see the contribution from their revenue during 2024, 6.6%. They're also planning to buy Neurometrics, or Neuro, which makes neurotech devices for pain. This deal is still in the works. If it does not go through, their stock price could fall. electroCore operates in a very competitive market. The first is the primary headache market. Let's talk a bit about their competition. We have to see how well electroCore can compete with a lot of different companies that have many different headache treatments, such as injectables like Botox. Here is their market and competition for their general wellness products. The global wellness market is big and they want a piece of the pie. According to McKinsey, the global wellness market is worth more than 1.8 trillion. The competition includes established companies and potentially big tech like Apple and Amazon. The FDA is also important for their company. GammaCore is cleared by the FDA for a few types of headaches. Truvaga and Tastin IM are being marketed as low-risk general wellness devices. So how do they protect their business? By getting patents and trademarks. As of February 1st, they have more than 215 of these, including electroCore and GammaCore, etc. How many employees do they have? 73 as of February, which is important in understanding their costs, which we'll talk about later. If you want to know more about anything we just talked about, scroll back up using the table of contents. Now, let's take a look at some of the risks electroCore faces. It's important to know what might go wrong. One of the biggest risks is the need for more money. They have been losing money for a while. They might need to sell more stock, borrow funds, and there is no guarantee on the outcome. Next, there's a risk involved with their new programs like direct-to-consumer sales. Also, third-party payers might not pay for their GammaCore treatments, which would affect sales. Also, electroCore has a limited track record selling their NVNS stuff. This means their success is far from guaranteed. Also, cuts to military budgets could hurt sales of their Tastin IM product, which is the product for military. They also have a history of losses. If they can't make profits, their business could suffer. A material portion of revenue came from a contract that will expire on June 14, 2025, and there is no assurance it will get accepted when they replace it. Also, they rely on a few big customers, so losing one of them would be a big hit. Also, something to keep in mind is that the CE certificate expires on June 30, 2028, and they will need a new certificate to sell in the UK. They are also being sued, which is not a small matter. The report mentions that the aggregate market value of voting and non-voting common equity held by non-affiliates of the registrant based on the closing price of the shares of common stock on the Nasdaq Capital Market on June 30, 2020 was $34,861.01 held. This is basically how much their shares are worth. There are 404 stockholders of record as of March 6, 2025. They also do not plan on paying dividends anytime soon, so do not count on that. Now comes the juicy part, their financials. Let's see what they say about them. The United States Department of Veteran Affairs comprised 70.6% of our revenue during the year ended December 31, 2024. They continue to have a history of significant losses, keep that in mind. Their operating results will vary from quarter to quarter. It will go up and down and hard to accurately track. Now, let's get into the numbers. For the year 2024, net sales were $25 million. Cost of goods sold was $3.7 million, giving them a gross profit of $21.3 million there. giving them a gross profit of $21, so $3 and $30, operating $1 million, so a lot of red. Carnival dollarsing in a loss of operations of $12 million. So then a loss of operations of $12 African dollars offered me, and their operating expenses were $33.5 million, resulting in a loss of operations of $12.1 30 afend. 70 end, their net loss was almost $12 million. So a lot of red. At the end of 2024, they had $12.2 million in cash, marketable securities, and restricted cash. Operating activities used $6.9 million in cash. The big use was net loss of operations of around $12 million, and they plan to use more money to promote this. They got most of their cash from stock and warrant sales. Alright, that is it for this report. electroCore is in a tough spot. On one hand, their new product has seen sales jump 57% compared to 2023. Unfortunately, they still depend on government contracts for much of their income and continue to operate with heavy losses. The Neuro acquisition has the potential to transform them, but can they make the deal actually pay off? Whether they can manage these risks, expand their market, and achieve consistent profits remains an open question. electroCore needs to prove it can not just innovate, but also operate sustainably to truly succeed, and the stock might be a good one to ignore for the time being. What do you think? Let me know in the comments below, and be sure to like and subscribe for more corporate decoders.